In this lit video, I am going to be live trading with over 100 members of the inner circle. Now, I am so excited to share my insights and the whole thought process of the particular trade that we are currently in. And today's main focus is on position sizing, because once you press on that buy or sell button, it's already done. You can't go back from that. You're either gonna take a loss or you're gonna go out with profit, right? So now, because of that, you have to understand how to think when you're already in the trade, because it's easy to just sit on the chart, press buy, but it's a different story to see your money going up and down and to understand what's happening as the chart is moving, because the chart is always going to be forming new setups with each and every single candlestick, right? So when you enter the buy, it was a good setup in your eyes. Yes, you had analyzed, yes, you see the break and the close of the support and resistance zones, but it's a different story when you now see a big bullish engulfing candle when you have gone in for a sell, right? So today we were focusing on US30. On Nasdaq, I'm actually looking at the chart. I haven't seen a really good formation yet, but on US30 I've seen quite a few entry points, and we've actually managed to capitalize on a really good entry that I'm actually going to break down to every single one of you guys. But before we do all of that good stuff, if you are new to the channel, welcome. We trade the Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn your post notifications, and subscribe to the channel. Now, right onto these charts. So the market hasn't been looking really bad for the past 2 days, right? Today is a beautiful Wednesday, and we're gonna have FOMC minutes in the evening, so we want to try and be out of these trades before FOMC minutes, right? Because you really don't want to be in the trades when the news is going to be happening, right? Sure, you know that, because I'm always emphasizing on that point. So the good thing about this trade is I dropped it in the free signal group as a setup right over here. As you can see right now, I wrote for them that based on the trend, we're headed for a bullish run, so I'm eyeing a potential entry in that zone, which is the zone that I indicated right over there. So we wanted the market to get back into that zone, and then we go in for the buys. Now in the group we have 5,648 members. I'm not so sure how many of you guys absolutely managed to capitalize on the trade, but in the inner circle we absolutely did catch that buying trade. As you can see right over here, the entry was a little bit late from what I wanted, because we were actually in a sell on that trade. So I wanted to be a little bit I wanted to spice up the trading a little bit. So I saw a really good selling opportunity on US30. It was really good, because what I've noticed in the market is the market just doesn't move like tap water. And I know a lot of people that have been following the channel for quite some time, you know this statement, right? And I always see it in the comments, right? So the market really does not move like tap water. There's no way that it's just going to sell and just keep selling. It has to get to a point, retrace a little bit, continue with the selling momentum, or if it's buying, right, it's not just going to skyrocket to the top. It's going to buy to a certain point, retrace, go back up, retrace, and keep going in that sequence. So what happened right over here is I knew that the market had to come back to that certain zone that I had marked up to complete the movement before it actually starts going back up to the top, right? So I was sitting there. It was around 4 o'clock, and I hadn't gotten a setup for my buy, because I always want to go in for the buys because we're on an uptrend. And then I'm looking at this market and I'm seeing that the buy is at this zone, so why don't we sell to that zone and then go in for the buys after it reaches that zone? Now obviously this is not like 100% trade before you place it, because there's no trade that's going to be 100%. It's still just an analysis. I made an analysis and I saw a good selling opportunity. I gave the signal and it absolutely dropped with us. As you can see right over here, the sell was good right there. We absolutely just caught the sell, and then it dropped right to the zone, because the entry point was our take profit. The entry point in the free signal group was our take profit right over there, and then it just spiked up to the top. Now because I had gotten into this trade as a sell, right, it actually delayed my buying entry, because I had to now close the sales and then tell them, oh, buy US30 at that zone. I gave it as a buying limit because it had already spiked, and then as you can see, it actually just played out really well, right? It just then spiked up up to the top and just completed the movement. Now what I want is the market to continue with the movement. We have taken the first and second take profit, right? But if there's an opportunity of making money in the market, why should we close our trades when we can actually capitalize? Now this is not a fact that the market will still keep pushing up to the top. It is forming new setups as it forms each and every single candlestick. Right now, as we are in this US30 trade, we need to understand what is the next candlestick going to say at that level, because that level is a resistance zone. So at a resistance zone, the market can break out of the resistance or it can reject the resistance. Now there is no point of you holding on to the trades that have been rejected at a resistance zone. You can just exit those trades and look for another setup, because if it rejects at a resistance, there's a high chance that it's going to drop, right? And then if it rejects at a support like what it did in that zone, there's a high chance that it's just going to what? Keep pushing up to the top. Now we want to see what is US30 going to do at this zone, right? So right over here we go on to a 15-minute time frame. On the 15-minute time frame, I can already see that the market is rejecting. Look at that candlestick on the 15-minute time frame, right? It's a rejecting candle, but the candlestick has not yet closed, so it does not have information for me. I'm gonna have to wait for 11 minutes, bro. It just started, so that's good. And then the 30-minute time frame is also closing in 11 minutes. I'm always going to base it on the 30 minutes time frame, because that is where I made my analysis, right? So if this 30 minutes time frame candlestick closes outside of that zone that it tried to break out of, because you see it made a wick and then it dropped back down inside. If it closes as a rejection, I'm going to exit the trade, right? We only have one trade left. We took profits TP1, TP2. The last take profit is if it breaks out of that zone, and if it does, we're going to add positions to capitalize on the trade. So now this is what is called managing your position when you are in the trade. Now other traders, they choose to just place their trade, place their stop loss, and they take profit and then leave those trades to run. But I am a day trader. I want to trade when the session starts and then capitalize within that first hour of the session, or those first 30 minutes of the session, and then I'm done for the day. So I really can't afford to let the market move in profit and then go back in loss, and I need to capitalize on the profits that the market would have given me at any time. So now let's just check this on the 30-minute time frame. On the 15-minute time frame, again, you can see that the candlestick keeps dropping. It keeps dropping, and I don't think it's actually going to break out, because the smaller time frames are already showing us that the sellers are stepping in to this market. Let me just check on Nasdaq. Maybe we can see a really good trade too, because we are actually in the New York session right now, and this is when we have volatility on the US stocks. So let's see what Nasdaq is saying right now. Okay, so I had my positions marked up like this on the Nasdaq, and yeah, just the same thing. As you can see, Nasdaq broke out of that zone and it has not yet closed outside of it. So I don't have any reason trying to go into this trade, because if anything, I would go in for a sell on Nasdaq, but I really don't want to try that, right? Because yeah, Nasdaq, I don't want to sell Nasdaq at all. So right now you can see at the zone it broke out, and currently it hasn't closed, so I can't check the trade. Right? If it closes, I'll come back and check it. But the 15-minute on Nasdaq, it closed. It broke and closed on the 15-minute, but it's too small a time frame for me to actually consider, right? I wanted to break out on the 30-minute time frame, then probably I can consider it. So if it goes back down to that zone and closes on the 30-minute time frame inside, then I'm not going to take the trade. We're just going to call it a day and focus on US30. Let me see what's happening. All right, so on the US30 trade, it keeps going down. I am guessing that this is going to be the end of it keeps dropping. Yeah, I'm guessing this is going to be the end of our trade on US30, because we're gonna exit. Now we should have exited already here, because it has already dropped down. This is like a rejection. And if you see the market doing this, it's not a good thing to enter another buy. A lot of traders, they like to do that. Like after you analyze, the market moves up in your direction and then it goes back to your entry point, then you want to enter again. That's not a good way to trade. Normally when you see the market going back to your entry point, there's a high chance that it's actually going to break out and keep going down. Now let's exit the trade. It has broken the trend line. This is a rejection. This is a change of setup, right? So let me just tell them Alright, as you can see, now close the remaining positions. We didn't get a breakout. I told them that the final take profit had smashed. We shouldn't close our trades. We want to wait for a breakout. If we get a breakout, we were going to add positions, but we did not get a breakout. As a normal trader, you should accept when the market is changing. If you haven't read this book called The Biggest Loser Win or The Best Loser Wins by Trader Tom, it's actually a good one, right? It's actually a good one. It shows you that, you know, those traders that actually see that their setup is going against them and exit early are going to be more profitable, right? They take small losses and close their trades fast. And then when they have winning trades, they ride them. They are more profitable than those that want to hold on to losing trades. Right now, as I just told them that we should exit this trade, there's a chance that it will keep dropping. So I don't want to be in this trade when there is a chance that it will keep dropping. I don't want it to hit my stop loss. For what? Look at Nasdaq. Nasdaq has already rejected, right? Those sellers, I think those people that sell, they have already taken advantage of that. All right, US30, I think is just going to keep dropping at this spot. Yo, I think it's just going to keep dropping, right? I don't even want to be in this trade. Like, so if you always trade like this, manage your positions like this, you won't go wrong, right? You can see that we have 7 minutes for the candlestick to close. Yo, like, that is crazy. It's going to just keep dropping. This market will just keep, you know, falling down. Ooh, I'm not even done speaking. It just kept, you know, falling, right? We have 7 minutes before this candlestick closes. This is the 1 hour candlestick, right? I was thinking it's the 30 minutes candle, but damn, look at that movement on a 1 hour time frame. Yo, imagine if you were still holding your trade just because you want to be stubborn with the market. Yeah, you could have, you know, regretted that, but it's all good. What's left is to now just wait for a new setup, right? We have to wait for a new setup. Let me see if I go on Nasdaq. I want to see why I actually just sold off like that. Oh yeah, if I draw a trend line like this, we can see that we had a touch here, a touch there, a touch there. And yes, of course, it could have sold, right? It's a break and a retest at that zone. So there's a chance that, you know, it was going to really reject. Now imagine if you were stubborn in the buys, you could have really felt that. So it might keep just dropping. And as for US30, it's already a selling setup. As you can see, it has broken out of the trend line. You know that you want to wait for a retracement, you know, break off the trend line, it retraces a little bit, and then you absolutely just go in for your sells. So I guess it might be us calling it a day on you know, it might be us calling it a day on US30 and Nasdaq for today, because I don't think I might see another setup again, unless, I don't know, probably FOMC later will push the market. But we're good. I mean, we took a sell, we took 100 pips, we took another, you know, buy, we took 150 pips. Not bad, right? 200 pips, you know, 200, 300 pips thereabouts. We are good. We can call that a day. Absolutely not bad, right? On just one setup, right? I don't think anyone would be angry with that because what you'll be angry about is if you were still in a buy whilst US30 is acting like this, right? So I think we're gonna wait for another setup for tomorrow, and let's see, because this is just the first half of the market, right? So the market hasn't actually, you know, moved. This week wasn't really crazy. The market wasn't moving with so much aggression, so I guess we can actually see, you know, way better setups for tomorrow. But overall, I'm still going to be looking for buying positions. If it keeps dropping, it gives me, you know, better stop losses for my trades, right? So that right there is how you actually manage a trade when you're already in it. You want to make sure that you're following each and every setup that is getting formed by the market, not just being adamant because you're already in a buy or in a sell. You actually have to act according to what the market is also doing, and know when to close your trades, know when to add more positions, know when the breakouts happen, and know when the rejections also happen. What is happening, beautiful traders? It's a beautiful Thursday, and we are looking at this zone over here and this trend line with the touch here, touch there, and the touch there. So you already know that we want to buy Dow Jones, right? We want to buy the Dow Jones right over here. We are currently already in our positions with our stop loss nice and tight at the zone. Just for that reason, we're saying that if the market breaks out, that's a first take profit, the second take profit, and if it does break out, we'll write it trade up to the top. Now look over here, I also dropped this trade as a setup in the free signal group as usual. Just 3 minutes ago I dropped it, and right over there I'm asking them if they think it will be able to push up from that trend line. But technically we already in the buy on in the inner circle. We are in the buy. We also have a buy limit on the Nasdaq right over there, right? So the stop loss is not bad, right? Let's just check out Nasdaq, what it's saying. Why do we have a buy limit at this zone instead of actually just going into the trade? We are practicing patience right over here. You can see the market broke out of this level, and it's kind of like pushing, acting as if it's going to like close outside of that zone. But I can't buy at this zone. Why? Because the stop loss will be crazy. Look at this stop loss. The first take profit will be there, of course, the second take profit there, and if it pushes up, we'll ride to the top. This stop loss is insane. Ain't nobody would trade this. So I can't put the stop loss here or there. I have to put it at a zone that if the market gets to, I will be wrong. But if it goes to that zone, I won't be wrong. I'll still be correct, and I'll be taken out prematurely. So I'm going to wait for the trade to actually drop down to around about this zone, and the stop loss is a little bit decent, right? And then we can actually then ride that trade. For now, we're not looking at that. Let's focus on our US30 trade right over here. All right, ladies and gentlemen, you can see that we have broken this level and we're up almost $500. We've just clocked the $500 mark, and it just keeps pushing up to the top. So right over here, we want to close some of our positions, honestly, because we've just hit $600. Absolutely beautiful trade right over there. Smashed our first take profit, and 100 pips will be our second take profit. So I'm going to close, a few of my positions. Let me just leave 2 running, and see where it can take us. It has a lot more potential. In fact, let me just leave 1 running, right? I don't want to risk a lot on a trade that has potential of retracing, right? I'm going to close 1 more trade and just leave this current trade running. And if it does push up a little bit, I'm going to put my stop loss in the profits so that I can secure the profit that I made. Like I was saying in the previous, yesterday's video, right? I said that I don't want to risk the capital. I don't want to risk the profit, the capital. I don't want to risk the profit that I've already made, right? And let it go back to my entry. Oh, it's low battery. And let it go back to my entry, and then, just regret it. So I'm going to secure my profit. Let me just see how it actually then plays out. And we might end up taking profit because the final take profit has been hit over there. Or we might end up riding the trade if, it gives us a good momentum still. All right, as you can see, a few moments later, it is going right for the stop loss that we have put in profit. And it's all good. I mean, we're going to close with just, and it's out. We closed with like $35 from, 100 and something dollars. Not bad. I mean, if it had kept pushing up, we would be sitting in money, right? But it did not. And, we were waiting for a break. If we close, we'll see a continued momentum, but it didn't break out at that zone. We are out of the trade. All right, you can see we are currently in a drawdown on my funded account, but we are pushing it up right over here. I just added a position on this Dow Jones trade that we're currently in. Yesterday, I took a crazy loss on Nasdaq and it put me back in drawdown. Right now, I have just gotten back to my initial capital and we have to make profit so that we can get a withdrawal in a few days. But this is what the account currently looks like, and drawdown is real, guys. It's not just, profits each and every single day. You take losses sometimes. Let's get onto these charts and talk about this trade. All right, perfect. We have just pulled out the trend line right over here. So we already in the trades. Let me just show you. So we have 4 trades running over here. After that Nasdaq loss, we want to get back on track. So yesterday I wanted the market to push up to the top if it had rejected at this particular zone, right? You remember it did not break out, it just dropped right to the bottom at the zone. It was either going to break out of this level or actually drop and come to this level that it actually dropped to, which is what it did. And fair enough, the market will do what it wants. Right over here now we have this level that the market has just broken, and we want to find a buying entry. So it broke out of that zone. Obviously that is our cue to buy the Nasdaq. So obviously I just went in and bought the Nasdaq, gave the first take profit right over here, second take profit right at that zone, and we swing it up if it keeps pushing to the top. Right over here on the 1 hour time frame looks absolutely lovely. The stop loss is going to be a little bit tricky because at the zone it's not yet really wrong, so it has to come to this zone for the market, for the trade to be actually wrong. But before it does that, break this trend line, it's still a good trade. So the stop loss here is really large, right? So let's just see how this actually plays out, and let's see how much we can actually make as the day progresses, right? So over here, if it does break out of this level, I'm actually targeting this first week right over here, but it won't hold, and then the next week, and obviously the highs on US30. If it does break out, then we're absolutely going to ride the trade to that zone. So right now we're just going to let the trade play out. Oh man, what a way to close off the week. So I'm in the prop right over here, and we're up 1% back from drawdown. And right over here you can see that we're also up $400 in a personal account. And yo, quit playing, man. This is the way to end and close off the week. Yo, let's go. Oh, I've already secured profit, just in case. I've already secured profit right over there, and it's going to just tap it out and I'll be out of the trade. I am taking whatever the market gives. I'm not even playing.